afternoon. How are we all doing? Afternoon, Monkey, JC, Peter, Crom, Jerry, Virginia, Amy. How are you doing? What a waste of time that was today. CPI did nothing. Absolutely nothing. Well, it didn't do nothing, basically. It moved the market, but literally just went up and down, and that was it. Load of crap. Afternoon, Joe, Francisco. So, yeah. Don't know what to make of that. Basically, we've got 3.7 off of a 3.6 forecast. Monthly, a 0.3 off of a 0.2 forecast. So, ever so slightly up. But not enough to really power up the US dollar. So, I don't know what they're going to make of that. So, literally, all we got was a sharp move down, a complete retracement, all the way back up, and then we're back to where we were when we started. Whipsaw. So this is a typical, going back to what we were talking about this morning, this is a stop run, a stop hunt. So what they've done is they've taken all the liquidity from everybody down there, and now they're going to run back in the opposite direction with it, because that's what they do. They hunt retail stops because we make such a difference to them. So yeah, all we've done is limit orders have triggered again at the lows, and the buyers are in control. So weak US dollar. Can't see any reason for a strong US dollar off the back of those figures, or a weak US dollar, or anything really. It's just no news, isn't it? So all I've done today is banked $350, closed out those 2 US dollar CADs that I had the trailing stops on in case we rallied. I just got taken out on the liquidity run, stop run, move. Yeah, so banked a little bit on that. It's not gone anywhere. So I get the feeling we're going to see a weak US dollar off the back of this. To me, this is a reason not to increase interest rates. So CPI ever so slightly creeping, rather, there, is nothing exciting, positive or negative. Stop run Elmer Fudd style. Yeah, so afternoon Fletch, afternoon John, Brian, Hamza, how we doing? So yeah, no movement. Nothing much else off of the news either. Fed fund rate 5.33 versus 5.33, no difference. Still forecasting a mild US UK recession coming out of Fitch. Still expect a mild US recession as well. So there's nothing much off the back of that CPI figure at all. So load of rubbish basically. Whipsaw on the indices. So from what we're interested in this afternoon, we've had a big whipsaw on the indices, but no movement. So I suspect we will get a move. That I doubt very much whether that is going to impact us today. A little bit more volatility going into the open than normal, but we'll see. So we'll see what the ranges are like pre-market, but they look okay at the moment. So I don't think there's any reason to suspect that we'll do anything different at the open today than normal. This morning's DAX hedge, I got triggered on the long on the pre-market, then I got triggered short. We pushed up into the gap. I said gap fill likely to be the high and then pull back. I didn't close it out there and take that short. I should have done. When I got to there, I was like, yeah, that was the right move, but too late. So I said I'm going to play it down into these 2 lows here, which is the weekly lows from a while ago, these 2 black lines. That was the plan I said this morning. So I did exactly that. I traded it down, took off the shorts at 3R in that gap, added a second long, exited, banked $1,400. Should have not banked $1,400 and let this thing run. So at the moment, I've got the EA set up on the VPS. So what you're seeing here is just the same account that's running on the VPS, but this version of the EA that I've got running on here isn't taking the trades, the VPS is. So what I'm going to do is I'm going to adjust the loss recovery target to roughly 0.5 instead of 0.2 it's set at the moment, because as soon as that move happened and it exited and banked that 1500, I was like, that's too quick, far too quick to get out of the trade. So I could have made 10 grand on this today if I'd let this run. So personally, I wouldn't have closed it there, but the EA did its job. It closed out. I told it to close me out about 1500 and it did. But yeah, that's too tight. I'm running back tests at the moment because my back tests all failed. So I'm rerunning the back tests at the minute in here. That's going to take 18 hours. So I'll have the results of that tomorrow. Running 1200 system parameter permutations on the new version of the EA. So I'll know more tomorrow what is the best thing to do on that. Those are the positions that I'm in. I've got 3 minutes to the open. So nothing different from this morning. I'm literally 0.35% higher up than I was this morning. Still in 3% of drawdown. Just not going anywhere, is it? So I'm hoping now my average is at 125 ADR. We can get a push up on this pound US dollar today and hopefully get a little bit of US weakness in. And this double bottom bounce where we had the market structure shift before this drop and the news, I'm hoping that they can now start this rally, break that high and get up into this propulsion and get this move finished. So fingers crossed this afternoon. US dollar has a little bit of a weak wobble, which means we will potentially have rallies on the US indices this afternoon. So we'll see what happens. We've got 3 minutes still to the open. Quickly going to cover ADRs. There's only 2 ADRs today. Shows you how crap this news is. Aussie New Zealand hit ADR on the US dollar CPI and bounced straight out immediately off of ADR. So we pushed into ADR and went. So 5 minutes. You haven't had a reversal alert on this yet. Because obviously the ADR hit was off of the news. So that would be your reversal. So not a great entry, Aussie New Zealand. And the US dollar Swiss, obviously, that's an ADR hit, went straight up into ADR, rejected it straight back down again. Again, no reversal alert. So there's no ADR reversals today. It's just an absolute mess. As you can see, the market reversal alerts indicators going, what? Because it's just whipsaw range. So nothing exciting there. RSIs flat. There you go. Analysis done. Pretty much tells the story of the last week. I am sitting in drawdown and I have got nowhere to go. So I'm just waiting for this market to kick off. It's September. We should be moving now. We're still in August as far as the markets are concerned. So yeah, not going anywhere this week. We need something to kick this into life. So there's nothing to analyze. So just going to trade the opening range breakouts as normal. We'll see where we go with the ORBs. We have 25 seconds to go. We'll have a look at the upside and downsides in a minute when we just see what ranges are put in. Think we might be a bit big on the Dow today. NASDAQ and S&P look like decent breaks off of the pre-market range. So we should get moves on those two, but the Dow I think is too big. So Dow's too big. That range was 620. Maximum range I'm looking for is 544. So that's too big to trade. NASDAQ I'm going for. S&P too big as well, just. So that's over 20% of ADR. So not interested in taking a range break on anything over 20% of the average daily range of the instrument. NASDAQ I will, because that is below. And I'll look at the 5-minute opening ranges on the S&P and the Dow. See where we go with this. Looks like we want to break long, which would indicate US weakness. Interesting. Why has that not taken trade? Oh, it has. Oh my God, I've got my charts in the wrong place. That's why I'm getting confused. I'm looking at my other platform over here, and the NASDAQ and the Dow are around the wrong way. I'm getting confused looking at going, why is the NASDAQ not taking a trade? It's the DAX. US Tech, US 30, S&P. US Tech, US 30. Rearrange those. There we go. Now I'm used to having things in the right spot. Confuses me otherwise. Right, Dow Jones, big break to the upside. NASDAQ, nice break to the upside as well. So if you did take the pre-market 15, God, scared the life out of me. You see that? If you can see it. Window cleaners. Scared the life out of me. Sorry about that. Right, Dow Jones. It's like, what the hell is that noise? Hopefully the wife's here because I might have to let him in. If the doorbell goes, I'm gonna have to go. But yeah, anyway. So Dow Jones got a nice break on that. If you did take the pre-market 15, you have got 1R so far. Don't appear to have I've only got 1.5 R, that's why. Right. What's that line? Anyway, yeah, so you're approaching 1.5 R. There you go on the Dow. You're just about to get 1.5 R off that into propulsion. So watch this for shooting back down. Decent move there on the Dow. NASDAQ upside break looks like it's running out of steam as well. I can hear all sorts of things going on around the house now because the window cleaner is moving around the house. Very weird. Let me just catch up on the chat while we're waiting for stuff to happen. Morning, Jimmy. Morning, sorry, the update.news. Yo, mower in. Don't know what that means. You planning on putting this new EA on MQL5 or keeping it almost holy grail to yourself? I'm keeping it to myself because I'm making so much money out of it. I will put it up. I've got to test it yet, though. I'm not going to put it up until I've finished testing. Should have taken that. NASDAQ's pulling right back. I was being distracted then. I should have taken that off. It was just under 2R. I should have closed that out. I didn't. Hopefully we get a continuation rally on that. What is the pip offset for pending orders? Whatever you want it to be, Peter. You choose. Up to you. I'm using a little bit. There's no right or wrong. Just a bit above the high and the low. So you don't get taken into double tops. That's all it is. Literally, the whole idea of the offset is just so you do not get double topped. Yeah, there's the high, there's the low. If it double tops to the pip, which it often does, you will get taken into your trade on spread. So I'm putting basically outside of spread, really. So look at the spread on your broker and just make sure it's bigger than the spread of your broker. Basically the rule. Right, so as you can see, the 5-minute ORB has been drawn in red, meaning that the 5-minute range is also too high. That's 129 off of a range of 67 as a maximum. That one is 1130 off of a 544. That is far too big to trade. So chances are we may get the market just flip-flopping around inside or around the range because it's done a lot of liquidity. The open there, it's done 40% of its average daily range. Near enough. So average daily range is 272 or 2722. It's done 1130. So over a third of its average daily range in one 5-minute candle. So it's going to find it hard to get any momentum today, which is why they've been skipped. This is one of the advantages of this new version is the analysis on the pre-market and the opening ranges and automating that don't get involved scenario. NASDAQ struggling. As I'm not trading those two today, I'm taking an executive decision on this and I'm closing one NASDAQ just so I can bank $2,500 on that. Break even on the second half of the position. The only reason I'm banking this is because I'm just trading the one instrument there. I've got 1,400 locked in from this morning. So I just want to lock in some more profit. So that puts me on $3,000 for the day. And we've rejected that high. That was a hell of a pullback from that high. So what I'm worried about is this just flip-flopping around with the other indices today and not making any money on it. For some reason, my terminal seems to have completely frozen when I close that order. These ECN accounts, I'm going to switch this over to a prime because this is not acceptable to keep freezing like this. My prime account is still ticking away absolutely fine. Look, nothing wrong with it. You see that? I've got it too high. Yeah, nothing wrong with that at all. This one stopped. $104 millisecond connection on that account. This one, 44 milliseconds, absolutely fine. This is ticking away as normal. Both ECN accounts, both on the same server in Finland. Something really, really wrong with Forex's ECN accounts. They seem so intermittent with these data freezes. I don't know if anybody else is experiencing this. I've not had one issue on the prime accounts, but on the ECNs, it seems, there we go. Should be back now. There we go. Back. That is a long time on a scalp. That is a long time to be frozen out the market with that much on the table, not able to make a decision. Not acceptable, is it? So we are pulling back again. So I might be glad I took that off this morning. Right. Dow, we've got 1 minute left on this 5-minute candle. Dow is painting an inside bar. S&P, inside bar. NASDAQ, inside bar. Yeah, so no movement, no direction after the initial cash balance. So be careful today. If you haven't made your money already, it's one of those days where we might have had all the liquidity burnt off of that news. Yeah, this may be too much for them today and they haven't got any ammunition left. What happened there? That was the window cleaners. Do you have any login problems at RoboForex? No, apart from that disconnection every now and again. Greg Specker spying on me, probably. Jal did 5% today. Very good job. How'd you come up with your EA ideas and what's in your head for a possible next EA? I don't really come up with many. My EA, I have got hundreds of EAs, hundreds of them that I've built. The only reason I've gone again. That one hasn't. No, this one hasn't gone. This is the other ECN, look. Now this one's frozen. Yeah, I mean, I build EAs to disprove strategies, basically. So whenever I see a strategy, I have over the years spent a long time, as everybody does, hopping around, looking at systems, looking at strategies, looking at instruments to trade, looking at indicators, looking at other people's EAs, looking at everything. And basically, when I come up with something that looks good, I build an EA to back test it, out of sample test it, system parameter permutation test it, and then forward test it. So I find myself building a load of EAs based on what ideas are out there, basically, just so I can see what works and what doesn't. So that's basically where I get my ideas from, same as everybody else. Stuff. I'm in loads of forums. I'm on loads of groups. I get loads of emails sent to me off of email lists, and I build something to test everything everybody sends me, and nothing ever works. So the position trading strategies and the position trading EA and the indicators I built for position trading have all come from other systems and strategies I've come across in the past that haven't worked, and I've taken the bits that made logical sense out of those, extracted them, and built a new system strategy based on all the bits that actually did work, that made sense. So that's how position trading came about. The opening range breakout strategy I traded about 10 years ago when I was trading stocks. Couldn't get on with it, and stumbled back into it when we went into COVID, basically. And that's how this got built. So it's just something I picked up from something I used to do years and years and years ago. The hedging strategy is a variation on this, which I found by accident, because I was by accident, well, not by accident, but I was testing. I built a new EA based on the opening range breakout to gather data, to basically export data and export screenshots that I could use to do analysis. And I accidentally forgot to include stops on it, ran it, and it did hedging accidentally. And while I was watching this thing play out, I was like, this is much more comfortable than taking a stop loss. I wonder if there's an edge in hedging the open. This is what you see now. So a lot of the stuff you will find just comes out of my head because of accidents. I've had many strategies where I've done a test and gone wrong on the test and gone, actually, that's better than what I thought it was going to be, what I was trying to achieve. Because this is random. Most of the time, the stuff you think is going to be good isn't actually good. But the stuff that you think that will never work actually works, because the market just moves at random all the time. Okay. So there you go. So NASDAQ's pulling back. So we've got 3-wick rejection to the upside on the NAS. Big rejection. Inside bar rejection. Another double top or triple top. So basically this area here, this black line you can see on the chart, is 3 week ago's high. Won't be able to go back that far on the 5-minute chart. But that is an old high, yeah, from 3 weeks ago. Market's reacted at it multiple times. Yeah, just having a little bit of a reaction at it now. But nothing particularly exciting. It's been invalidated loads of times. But we are getting rejection up there. Limit orders are firing up at this level. So we'll see where we go from here. But locked in 1500 anyway. So I'll see if I can get the runner up to 5R. So upside today. Let's do our little upside game. Where are we going? What's the upside risks and the downside risks today? I use Choco Ping, and the ping is 2 milliseconds. No idea what that is. Sounds like a chocolate bar. Can you add a ka-ching sound to the EAs? I could do. I could get a sound effect, couldn't I? Ka-ching! So when it takes profit, I could get it to play a sound when it takes profit. That's a great idea. I'm going to write that one down. Sound effect on TP. Like it. Good idea, Fletch. Let's add some gimmicks to our trading. Emperor, I hedged the DAX, the Dow, the NAS, and the S&P during London opening. Right. First of all, Emperor, you should not be trading the Dow, the NAS, and the S&P during London. They do not move. That is the Globex session for the Chicago Mercantile Exchange. You do not get the volume. You trade the DAX in the morning or the FTSE or both. You don't trade US indices in the morning. You will get hedged. It's accumulation. Look at it. That day was a little different. It's accumulation. You don't trade accumulation. Not with a breakout strategy anyway. You're never going to make it with a breakout strategy in an accumulation period. Got into a hedge with all of them, but managed to get out while being in profit. Good job. NAS retest 15,347, then run to the upside. Pre-market high. Yeah, so that's the Globex high. So it could do that. So obviously downside at the moment, obviously we've got the Globex low, which is news. So I would probably scrap that as your level. The level to use would be ADR, which is here. And that also coincides with this low, this Globex low, or rather the low of the day, basically from Friday last week. So downside is kind of where we've tapped into. So if we are going to bounce, we could bounce out this propulsion gap or that propulsion gap. But if we go to the downside, I'll be looking for bounces down at ADR. Upside, very hard today. That area up there, which is previous day's high. That's Monday high. This is Tuesday high. So yesterday's high and the previous day's high all the way up there, but ADR is there. So you're looking at going sort of 150, 175 ADR to the upside. So unlikely we're going to hit that today. So where we are right now, that's your ADR high here. So going to watch for exhaustion in this propulsion gap and this high. See where we go from there. Thanks for the follow, whoever that was. Marla, welcome aboard. I need to get one of those things, you know, when streamers get that, they have that funny thing that pops up on the screen and then they have to do some kind of weird dance or something. Shouldn't have said that. On the hedging EA, since you take 20% of the profit from the winning trade, then in the situations where you don't get hedged, do you close out when you're in similar profits? No. So if you don't get hedged, you just do as normal TPs, yeah? So when you can set whatever you want to be your TP. So in the inputs, you can set what you want. TPs are here. Targets. Position 1 is 2R. Position TP2 is 5R. Yeah. So when it gives a clean break, as it did today, TP1 was set here. Yeah. TP2 is up at 5R. There. 5R. Yeah. So 2R and 5R is what I'm using at the moment. I don't know if that's ideal. I've no idea. I'm back testing and doing system parameter permutation tests to find out what optimums are. But if it gets hedged, it automatically moves your TPs to 5R, your second take profit level. Yeah. So basically, I'm looking for a 2R return. That's my risk, is the range. So I'm looking for twice the range as my first TP to get out. Today, I took it off too early. I took 1 and a bit. That's just because of the size of that wick. That's just my choice today. And again, my choice today is influenced by what? The fact that I'm not trading those two, and the only opportunity I've got for making money is this. I've got $1,500 I do not want to lose. So that was the decision-making process there. Bank that $3,000 because I haven't got a lot of other opportunity to make money today. If it hits the 2K, I would have been 1,500 quid lighter than I am. This is just frozen again. This is really bad today, this market. Look, Look at this S&P. Oh, no, this one hasn't frozen. It's the other term not frozen. Or has it? No, this has frozen. Market's pulling back. This candle's down here. I'll paint the candle live for you. There you go. There we are. Look at these wicks. Look at the bodies. Market's in a mess today. Not going anywhere, is it? I'd be glad to bank that. What range you are trading on the NASDAQ today? My pre-market is nowhere near 2R. What range am I trading on the NASDAQ? 10 minute. 10 minute. So that's 5 minute. That's the 10 minute. That's the 15. Not going to get it today, I don't think. Let's see. We're just putting another lower low. So we're putting in lower lows and lower highs. That's an outside bar technically, but buyers have run out of steam, haven't they, at the minute? Sorry, but the sellers also don't seem to have an awful lot of traction either, but we'll see. So so that's trading the 10 minute. Basically, what this does, Peter, I've identified that on the pre-market range, the optimal range you need is 10 to 20%. Yeah, so that you can get enough volume coming out and it's not too tight that you're going to get whipsawed massively at the open. Yeah, so if you use 10 to 20% of the ADR to find a range, that's pretty good. Yeah, there's never a right or wrong. But what the EA does is it goes and looks at the 5 minute candle before the open and says, is this within the parameters of 178 to 356? If yes, use it. If no, check the high of that and the low of that. Is that within the parameters? If yes, use it. If no, check that. And it just goes back until it finds a range that is tradable. And again, it's an input I've left in there at the moment that you can set the look back. I've got mine set to 5. So I'm basically saying go back 25 minutes before the open and find me a range that suits. If there isn't one, don't trade it. Wait for the 5 minute range to form and then trade the 5 minute range. If that's wrong, skip it all today. Yeah. So as an example, the Dow Jones, this range here was too big. So it said, I can't find a range for you that works pre-market. So we'll have a look at the opening range. The opening range is too big today. Stay out. Not tradable today. It's not going to be tradable every day. You're going to get the market having a TISWAS before it opens or when it opens. It's just not going to be viable for you to try and get a decent risk reward. Look at the risk reward on this, yeah? This is exactly why those parameters are there, yeah? And this is something I observed while trading the opening range Breakout EA, which is why I built this EA to retest what my theories were about what I witnessed on the opening range Breakout. So this range here, yeah, that is 1R and that is 2R. That is 1R and that is 2R. So for me to get a 2R, which is really what you need, a 2-to-1 risk reward ratio as minimum if you're scalping, right? For me to achieve a 2-to-1 risk reward today on that range on the Dow, it has to move beyond ADR. There's ADR, the average daily range of this instrument. So 58% of the time, the market does not get beyond ADR. So for me to take a breakout of this range today and get a 2R, it's got to go all the way up there beyond average daily range and all the way down there beyond average daily range just to give me a 2R, which isn't a great return, is it? Much rather have a 3R, 4R, 5R. Yeah. Now look at the NASDAQ. Yeah. So we've taken a trade on the NASDAQ. There's ADR and there is ADR. ADR low is 4R. ADR high is 3R. We can easily achieve a 2R return within ADR. So what I'm saying basically is if I can't get a 2R return without going beyond the average daily range of the instrument, which is a statistical unlikelihood, isn't it? We know for a fact that 58% of the time we don't get outside ADR. There's no point in trading it because it makes the job very hard. So just skip it and wait for the next one. You're going to have more success doing that than trying to force a situation which is a bad trade. Yeah. Look at what this has done since the open. Look. We're inside range. Look, there's your 5-minute opening range. We haven't got out of it yet. There's your 5-minute opening range. We're not out of it. There's your 5-minute opening range. We're not out of it because the market's spent. It's done it. It hasn't got any legs left. It's done to over nearly 30% of its average daily range just trying to open the market. Yeah, these guys have got nothing left. You're out of ammunition. So I'm flat now on the NASDAQ. Second break even. So 1,600 bank there, 1,400 bank there. 3 grand done. Dusted. Right. There we go. There's your RRB stuff. Roman Trans. Of course it is because it's December contract rollover week and it's triple witching. Oh, Roman, you just come in here to disagree with everything I say. So I'm just not going to talk to you, basically. I don't really know what to say to you. It's not tradable all week. However, I've made 10 grand this week and it's only day 3. So obviously it's not tradable. I can't make any money. And it doesn't matter how much I prove to you that I can make money this week, even though it's a triple witcher, you're going to disagree with me. So forgive me for pausing you. I just can't be bothered to talk to you anymore because all you do is argue. Bye-bye. Next. So I just can't bother with trolls. What's the safest way to ensure that you don't have individual currency overexposure using the market reverse alert CA? Banhammer. There you go. Some people obviously always know better than you do. That's why they've come to your channel, because they're successful traders and they're not trading the open, although they know everything about it, but they're watching a YouTube channel about trading the open. It's like my son. He sits there watching YouTubers playing video games. And I say to him, why don't you play it? He's like, oh, I can't be bothered. Okay, so why bother watching the video about it? The fun is surely playing the game or earning the money, doing the trading. People that come into channels and know better about it and don't do it, can't be bothered. What's the point? All they want to do is argue. Some people would just want to watch the world burn. Anyway, so John, if you want to trade all indices, instruments with lower risk, exposure doesn't come into the equation. Yeah, so exposure is there to make sure that you do not get overexposed to an individual currency if you're using normal risk parameters. If you're going to reduce your risk down, what it means is you can trade more exposure. Yeah, so the 2 exposure rule is there to make sure that you are not over leveraging yourself with more than 0.5% risk over half an ADR of movement on an individual currency. Yeah. So if you reduce that risk down to 0.25, you could basically take 4 positions and still be in the same amount of exposure on a currency. Yeah. So that's the whole purpose of the set files that I've put out there with the lower reduced risk, is so that you don't have to worry about controlling what gets traded. Yeah. There you go. So this account here is trading everything. Yeah. But if I'm trading with a 0.25% risk, I wouldn't have exposure of 4 times on the US dollar because I'd be getting into too much drawdown. You can ignore it. Andres, Tom Hugard, the outcome of 1 trade is random. The outcome of 100 trades is predictable. Good saying. How is the outcome of 100 trades predictable? I understand that one. The outcome of 1 trade is random. The outcome of 100 trades is predictable. Oh, I see what you mean. Right. So yeah, if you've seen the same thing happen once, it's random. If you see the same thing happen 100 times, it's something that is going to happen again. That's what you're saying, isn't it? Yeah. And this is exactly the edge with the opening range breakout strategy and the opening range breakout EA. Yeah. We see the same thing happening over and over again at the open. This is why I'm saying if you get that much movement at the open, the likelihood is this is going to happen after it. Why? Because that's what the backtesting, the statistics say happen. If you get too much movement at the open, you don't tend to get a trend day. How do you make money in a breakout? A trend. Yeah. I see what you mean. Took me a while, that one, but I got there. A quote from his book. Yeah, I know what his book is. That. Shameless plug for Tom Hugard. Fantastic book. Go buy it. Up there with the best, that one. Doesn't teach you how to trade, doesn't give you a strategy. Explains very much like Trading in the Zone by Mark Douglas. Explains what you need to do, not how to do it, but what goes on in trading. I read loads of books. I read everything about trading. None of them make you profitable, but they reinforce all the crap that you see out there and that you can see through the crap, basically. Tom's friend trader who passed away about 3 months ago, David Paul. Yeah, Dr. David Paul. Yeah, his stuff's good as well. All the good people out there, right? Tom's good. David Paul. There's loads of traders out there that basically trade price action, and nothing they do is system based. The best traders in scalping are discretionary traders, and all they are doing is managing risk reward. You just need to know how to extract the money. You need to understand how everything moves and why everything moves, and that's it. That's all you need to know. You can then formulate a plan, but the best traders don't have a single plan. They have multiple plans. Yeah, which is why I come in here every day. And it's a prime example this morning on this DAX. Yeah, if you were in the live room this morning, I said there's one of two things going to happen today. And I said this here, didn't I? I said there's two things going to happen today. We are either going to, one, move up, complete the gap fill and drop, or two, move down, hit weekly support and pop. What happened? We moved up, did the gap fill and dropped to the weekly support and popped. 100% strike rate. Yeah. The reason I got out of this with this today isn't because I knew which way it was going to go. It's totally random. I had no idea when this opened which way we were going. If you were here in the live room, you saw me get into a hedge and go, right, I'm going to wait and see what happens. I knew that that was a possibility. I didn't take it. I missed it. So I waited for the next opportunity, which I took. But the reason I made money is not because I'm a good trader, not because I've got some crystal ball that predicts the future. It's because I had a plan for every outcome that was going to happen today. I look for where it's going in both directions. 90% of the time, I know where it's going because it does the same thing every single day. It moves to support and resistance levels. So all you've got to do is identify the possible turning points and then execute the trades with that in mind. Exactly the same as we do in position trading. When we take a position and it doesn't work out, we go, right, where's my terminal? This one. Where's it going to go? Support resistance. Yeah. Bounced off that support. If it's going to bounce off this support and we're going long, where's it going? Propulsion gaps. Why? Because that's what it always does. It goes to propulsion gaps. Look at all these grey propulsion gaps. It's not a coincidence. It goes and fills these. It goes and fills them all the time. We got two whacking great propulsion gaps there. If it's going to go to the upside, where's it going to go? There. Where are my TPs? There. It's not because I know it's going there. I have no idea if it's going that way first or whether it's going that way. But what I do know is if it is going up, I can get out there. So if I set my TPs there, I've got an exit. I have no idea where it's going. I've no way of predicting the future, but I've identified the fact that I can't predict the future. So to be able to make money out of the markets, I need to wait for it to go where I know it's going to go. And if it goes that way, I'll just add more positions until it goes that way, because it will go that way. I just don't know when. And sometimes you get stuck in things for weeks, like this. Same with the news. The reason I put these here today, these trailing stops on these two positions, Yeah. Wasn't because I knew the news was going to cause a spike in that direction. It's because I knew it could. So I planned for the eventuality. So my plan, as I said this morning in the live room, was I'm going to trail these two positions because if it spikes to the upside, I can bank the money and add them back on again when we come back up into these propulsion gaps. If it just spikes up and takes me out and then drops, happy days, because it's going the way that I want it to, because I'm in sells already. Just plan for this, plan for that. You've no idea which one it's going to do, but if you know where it's going to go, you can bounce your orders around to execute and make money out of the market. That's what all the books that successful traders have written will teach you. You have no clue where it's going. Stop trying to predict it. Stop trying to use an indicator to predict it. You can't. Use an indicator to tell you what's happened in the past so that you can plan the future, but you don't know which one it's going to be. 50-50. Every candle, 50-50. Oh, I didn't know he passed away. Yeah, no, David Paul passed away about 3 weeks ago. 3 or 4 weeks ago. He'd been ill for a while, but very. If you haven't watched his stuff, go and watch it. He's got a lot of stuff on YouTube. Again, not going to teach you strategies, but he will. It's all about the psychology. People talk about it all the time. I don't know how many of you in here are like a couple of years into your trading, but after a few years of trading, I started coming across people talking about psychology of trading, and I started looking into psychology of trading, and I looked into it, and that's where I first read Mark Douglas's Trading in the Zone, because it's all about psychology. And got to the point where I was like, nah, and I dismissed it. What I thought trading psychology was about was trying to retrain your brain, trying to retrain your psyche, trying to reprogram you as a human being to see the markets in a different way. What trading psychology is, now I know, is really about is trying to train you that you cannot do that. You cannot reprogram yourself. You're a human being. You've got emotions. I got out of that trade too early on the NASDAQ today. Why? Because I'm a human being. I can't reprogram that, but you can use psychology to your advantage to unprogram yourself from trying to find the Holy Grail and trying to develop a system or strategy that is always going to work. As long as you identify that you're going to lose a lot, or you have to eliminate your losers by trading in a different way, that's what the psychology part of it is all about. And this is what David's all about as well. There's Tom with David. Yeah, very good. Been on lots of programs. Wyckoff, he does a lot of Wyckoff stuff. So yeah, very good. That's an Apollo astronaut. That's nothing to do with it. But go and watch his stuff. All helpful, very helpful. Okay, NASDAQ's pulled back into the initial range. So got a high. Now we just swept that low. Not really going anywhere, are we, today? Take some credit for myself. Well, yeah. I haven't read any books or anything, though. I can't be bothered to write a book. I haven't got time. I also know some guy on the internet who teaches trading. He uses all useless retail indicators, though. Can't remember his name. Exactly. My indicators are not for predicting the future. They're for telling you what's happening. Everything you see on my chart, all my indicators, are telling you either where price is going in the form of support and resistance or propulsion, or it's showing you when market structure is shifting into the other side, so you know who's in control. That's all my indicators are doing. They are telling you historical information as to where price has been and is likely to go again, and when the sellers and the buyers have taken control, not necessarily going to retain control, but have taken control. All my stuff does. I can tell you by the RSI that the market has pushed past tense up. Yeah. I can't tell you where it's going next, but I can tell you that when banks have made a push, they make a pull. So it's trying to tell you that there's a likelihood of something happening. All I know. It's all anybody knows. And that's the psychology you need to get your head around. That's the bit that people need to understand. You are never going to find anything that's going to work in this industry unless it has a long-term edge based on some mathematical formula that repeats itself over and over again. Pushes and pulls, market structure. Go back in time to the 1900s. It's been there since the 1900s. Opening bells, where volatility hits the market, has been there since the market's been in existence. Other than that, I can't find anything that repeats itself, apart from support and resistance. You make it sound so easy. It isn't easy, but it is. When you throw everything away, it becomes easier. That's all I will say. When you stop hunting for crap, stop hunting for something that works, you realize everything works. Every strategy you've ever looked at in the past, right? And I've said this before, every mean reversion strategy you've ever looked at in the past works. Bollinger Bands, brilliant. Yeah, they work, don't they? How often? Maybe 60%, 50% of the time. But what happens is the 40 to 50% of the time they don't work, you lose more than you win because you take your trades off too early or something else happens and it just becomes, it's not making me a fortune type of a strategy. Remove the stop loss from that Bollinger Band strategy and just take the next trade and the next trade. All of a sudden, what you'll find is the market's been pushing hard in one direction and will need to profit take. That Bollinger Band mean reversion strategy that you threw away 3 years ago, if you remove the stop loss from it and turn it into a position trading strategy, it becomes a winner. Why? Because you've removed the thing that makes you lose money. Just got to get your head around that. I cannot find a strategy that is going to be consistently profitable with a stop loss unless it has, as I say, a repeatable edge. But every repeatable edge you find on the back tester is never going to be repeated in the future. But one thing that is repeated every day is the opening bell. That's why ORB works. And if I'd have known that 10 years ago when I picked up that strategy, I wouldn't have been doing anything I've been doing for the last 10 years. I would have been literally trading that strategy. Psychology, I didn't know about that bit. Afternoon, Keith. Do you know any utility or indicator that analyzes P&L for individual pairs? What do you mean? What historical? As in your trading history? Is that what you mean? You'll have to clarify what you mean. Yeah. So this bit of software, I'll just download the account history out of here, just as an example. So if you export your account history out of here, you can use this bit of software called Quant Analyzer, which I'm just booting up. There you go. So Quant Analyzer is by Strategy Quant. They're a company that make system development software. It's free, Quant Analyzer. Google it, Quant Analyzer. So what it does is allows you to load up your statement into Quant Analyzer. And so that's the P&L from this account that you're looking at on the live room. And basically, you can analyze everything you need to know about it. So there's all sorts of different views it will give you, etc., etc. You can also load the individual pairs. So I've loaded a single result here, but you can load a portfolio, which is each individual symbol. And when you do that, have I loaded that into the same one? You can then separate out the individual instruments. So if you want to say, if I want to see how have I done on the DAX, I've done 11 grand on the DAX. How have I done on the Dow? $988. How have I done on the S&P? 5 grand on the S&P. How have I done on the NASDAQ? 3 grand on the NASDAQ. Yeah. So you can analyze each individual performance. You can see every single trade, how long you were in the trades for, what they cost you, your P&L, your run-ups, all sorts of things. It gives you an equity chart. Trade analysis, so you can look at what times of day you're good, what times of day you're bad. I can stretch it across. So yeah, this does all of that, and it's free. Yeah, so what did I hold for 8 hours on the NASDAQ? But yeah, it shows you how well you've done based on your trade durations, what time you take trades. So you see, obviously, this is only the indices. So P&L by the hour. So anything that's closed out 8 o'clock, I make money out of. More money than I do out of the stuff that I close immediately at the open. So this will be my hedges, obviously, in this particular account's case. What days of the week are you good and bad? I'm not very good on Thursdays, so maybe I should stop trading Thursdays. You'd need a lot more data to be able to analyze this, not just a month's worth or whatever. But so yeah, does it all. Quant Analyzer, it's called, by Strategy Quant. Thank you for subscribing, NA Gaming. Welcome aboard. How are you doing? What's the name of this analyzer? Quant Analyzer. I just said it again. Quant Analyzer with a Z because it's American. There you go. It's by strategy. I'll put a link in the chat. Get it? Strategy Quant is a piece of software that I've used for many, many, many years. It's not cheap at all. Oh, they've done a monthly. Yeah, I was going to say, I paid 3 grand for it because I paid one time. They now do monthly. Well, that's good. Per month for 12 months. Oh, so you've still got to pay the full amount. You can just spread the cost monthly. Okay. So it would actually cost you more money if you paid monthly. But Quant Analyzer allows you to create strategies. So it basically uses all the standard indicators off the shelf and will run anything. I mean, I can get, depending on the settings, I can get anywhere between 500,000 to 1 million strategies an hour tested over a period of 15 years. But it ain't cheap. And to be honest, I've never really found a strategy that works. I found a lot of strategies that work, but they will be very low return, 10 to 15 to 20% a year. So if you want to put a portfolio of them together, you'll probably be generating somewhere between 10 to 15% a year with stop loss based strategies, which I can do anyway. So I've never actually, I spent many, many years in that piece of software and actually haven't got anywhere with it. So I'm not a very good advert for it, am I? Can I show you how to load the statement? So yeah, all you do is in Quant Analyzer. So you download the statement from your P&L. So just go into your account history, set the time to whatever you want. So the last month, the last 3 months, all history, a custom period, whatever you want. Yeah. And then you export. So save as report. Yeah. You just save your account history as a report. That exports an HTML file. And then in Quant Analyzer, you go to, whoops, load report. You select that statement, that one there. And then you can either load it as a single result, so the whole lot as your portfolio, your trades, which will give you an overall, here is everything, or you can put it as a portfolio and recognized by symbol. So that will break it down into the individual currencies. And then when you load that, it loads this up. And you have the data drop down here, which is portfolio. So that gives me the total P&L for this account. This is only this month, which is why it's not got much in it. You can see it's just September. So that's the total. It gives you your drawdown overall. It gives you your risk-reward ratios, return on drawdown, your winning percentages, average trade profit. It gives you loads of information. And then obviously you just go into each individual currency and get a breakdown for each individual currency. So if you look at the portfolio equity chart, that will break down your entire portfolio. So each of these, that blue line is the entire portfolio. The green line is the DAX. That line is the Dow. That's the S&P, and that's the NASDAQ. So immediately it's saying you're way better at trading the DAX than you are the US. I've done a little analysis, a video on this, and this is how I eliminated gold from my portfolio. This is why I don't trade gold. I've used Quant Analyzer to analyze my portfolios for quite a few years. I'll analyze my trading history for quite a few years. I identified in there that when I went over to this overview, when I looked at the report, I'm just trying to think which report it was. I think I must have gone through it individually. I can't remember. But basically, gold was always what killed me. So if you eliminate, if you can identify like that, yeah, if one of those came out as a negative. So let's have a look at portfolio, this one. There you go. So this breaks down your symbols by your portfolio by symbol. So you can see the entire portfolio there and each individual currency broken down. So if you load this up and everything is a positive on there, apart from one or two things which are negatives. If you see these one or two things coming up over and over again and you're not making money out of them, stop trading them. Because whatever that loss is, if you remove it from your portfolio and your trading, instantly your portfolio becomes more profitable by the amount that loss was. So when you're trying to make yourself more profitable, most people try and see how they can squeeze more money out of their strategy or out of their system or out of whatever they're doing. The best way to actually make yourself more profitable is to look at where you're losing and eliminate all of the loss, because you're good at the stuff that you're good at. But the stuff that you're not good at, you either need to get good at it or get rid of it. Either way, that makes you more profitable. If you're good at something consistently profitable, just keep doing it because you're good at it and consistently profitable. If you're crap at something, either make it better or get rid of it. Suddenly, bang, your P&L goes up. Your risk reward goes up. Your return on drawdown goes up. Everything goes up. This software is fantastic for identifying that. So different templates in there for viewing your portfolio in different ways. So all trades, you can split it down between long and shorts. Yeah. Why is it always make money longing the pound US dollar? Well, because it's been trending up for the last year. Every time you've shorted it, you've been doing what? Trading against a trend. I'm not very good at trading against a trend. Stop doing it. Eliminate the loss. You become more profitable. It's fantastic for identifying all this sort of stuff. Yeah, you can change all these as well. There's lots of stuff you can analyze. Wins and losses by the hour, by the day, by the week, by the month. Trades by day, trade duration. Yeah. I am way more profitable if I stay in my trades for 4 hours. I'm not profitable if I get out of my trades within 15 to 5 minutes. What does that tell me? I should hold my trades longer. I'm getting out too early. If I hold them, I tend to make more money. So if I get out too early, what am I doing? Restricting my profitability. You don't find out any of this stuff unless you analyze it. Everybody talks about journaling. I'm not a fan. I was a fan of journaling, and I find it painful because I'm a bit discretionary and I like to just do stuff. So by getting your P&L in here, this is journaled for you, isn't it? not going to tell you why you took each trade, but it tells you what your weaknesses and your strengths are. Good bit of kit. Afternoon, Neo. Don't forget my FX book shows it all as well. Yeah. So yeah, my FX book, you can also sign up with my FX book, and that just links into your account, and that does a lot of analysis as well. My FX book's really good. It's not as manipulatable as that, but it's still, you know, it's free. Anything that's free is good. Costs enough money to do this job, let alone paying for other software. Can you show how to load the statement? I've just done that. Try to convert to PDF. All right. AZ, tracking is a bit different to position trading. In position trading, though, yeah, position trading is a little bit more tricky to analyze. Number of positions and all that stuff. You can do that. So when you get in so this is a position trading P&L, yeah. Typically, when we close our positions out, we tend to do them all in one go a lot of the time. So when you've got two things closed at the same time, you can tell that was one position. In this case, it's actually not, because I've still got 3 on the US dollar CAD. This was a partial. So yeah, there's lots and lots of ways of doing analysis, but there, for example, the pound US dollar, 3 drawdown controls, all at different times. So you can tell that those are 3 individual trades. You can tell by the lot size if it was an aggressive drawdown control position or a normal position. So there's things you can do to identify stuff, but with position trading, obviously, it's a lot more difficult to track maximum drawdown, all that sort of stuff. You can do what you can do. That's all. You might have answered this, but any idea when you are aiming to release the new EA? Not yet. I'm testing at the moment. So I've got a back test running here, which is all the system parameter permutations I want to test, which is going to take 17 hours. 1,200 permutations that are being tested. You can't see that because it's behind my head. Still can't see it because it's anchored in the bottom corner. But there's 1,200 parameters being tested here. It's going to take 17 hours. So when this test is over, and I've got the optimization results, I need to analyze all these results. And just see what the optimal settings are within the bell curve, basically, to find out the best way, really, to hedge. The best exit strategy is what I'm testing. Everything that goes our way, we haven't got to worry about. It's only the hedges. And what I want to know is, how is it best to get out of the hedges? So this is what the tests are doing. And when I've got that done and analyzed it, I then want to do some out of sample testing on some of these. I then need to cross-reference those tests with the NASDAQ, the DOW, and the S&P, because I'm only testing the DAX here. So once all that testing is done and I'm happy, then I will probably push it out. But obviously, I want to make sure it's got an edge first. We know the ORB's got an edge. This is obviously seems to have a better edge to me. I mean, I'm very skeptical about any strategy that has 100% strike rate. This hasn't got 100% strike rate, but I have to say, in 2 weeks, I haven't had a losing day yet. So I have had losing days with the opening range breakout strategy, but I haven't had a losing day with a hedge strategy. So it makes me more skeptical, if that makes sense, because I don't believe it. So I'm looking, I need to go through and find the Achilles heel in this, because there is one. I just need to find it. And I suspect what the Achilles heel is going to be is 200 ADR days. They are going to wipe out a lot of your profit. So I need to look at how often we get 200 ADR extensions. And I've got a setting in the EA which is going to export all of that data to show me where we got to ADR, how far beyond ADR we got. so I can analyze what worst case scenarios were, because they are going to hurt, or you're going to experience very high drawdown on them. So I just need to find the pitfalls, basically, and come up with a way to deal with them. It's important we know them. So I don't know the answer to that, Tom, when I'm going to release it. I might release it as a development EA, i.e. I'll put it out there. You can get it, but on the understanding that there will be changes to it. So it does what it does now, as you're seeing me trade in here, but I will be tweaking it, changing it, adding, possibly removing. So I won't publish any results, back testing, or anything like that, because it will be changing. And as that changes, it needs retesting again. But a lot of people have asked me for it. So I just don't want to release stuff that has, if people are going to use this on real accounts, I can't just pump it out there. I need to forward test it. And this is forward testing. I'm testing it on 2 different accounts every day now. And it hasn't fallen over yet. It hasn't done anything wrong. It's done exactly what I want it to do. So I'm pretty confident in it. But when you're putting stuff out there that's going onto live accounts, you don't want it suddenly going, oh, here's 200 lots, because that's possibility of people losing their money, isn't it? So I need to just verify it's working. So as I suspected today, because of the size of these ranges, we've got literally rotation happening. It is bearish at the moment. So possible market structure is starting to form short. Yeah. Oh, that's a bad drawing. So there's your market structure on those. So we could, though, just stay in a range today. But we'll see. Also, the history tab has a new reports section in MT5. Yeah, MT5 is totally different. I don't use MT5. I don't know if Quant Analyzer works with MT5 reports. I've never tested it because I don't use it. I mean, it is just importing an HTML file. Oh, no. Yeah, look. You can import from everything, look. Yeah, so you see, it'll work with anything. Use anything you like. Mumo, any clue when the index hedge EA will be on MQ? No, I just answered that one. I'm also waiting for it. I already trade the ORB hedge manually with good results and less stress. Good. There's a lot of people trading the hedge strategy with the opening range breakout EA. You can do it absolutely fine with the existing opening range breakout EA. So this one will do it. I've published a set file in Telegram that will replicate what I do. It just won't automatically move the orders, and it won't do the analysis on the range size. So that's the only thing it doesn't do. But just remove the stops, basically. That's literally it, isn't it? If you think about it, all I'm doing is removing the stops and just getting myself frozen in time. Nothing clever about it. David, have the ORB EA. We are not able to adjust the settings within the EA to kind of mimic the hedging part of the ORB. Yeah, you can. That's what I just said. In the Telegram group, I've published a set file in Telegram, which is that one. DAX hedge set for MT4, this is. So that set file, what it does Where is it? Okay. So what that does is it literally changes the risk parameters. So the amount of money to risk instead of 500 becomes 50. The percentage of the opening range to use for stops becomes 1000, 10R. Your targets become 20 and 50, 2R and 5R. Yeah. We're trading the same ranges. We're testing the pre-market 15. And that's it. So this is for the pre-market 15. Okay. If you want to trade the 5 minute, you would use 10 to 10:05 there. If you want to trade the pre-market 15, you would trade the 10 to the 10:15. Stop trading 5 minutes before the New York Open. Trade breakout 1 and 2. That's taking, sorry, at the moment it's set to take 2 trades. 1 TP, 2R, 1 TP, 5R. Yeah. The only thing it won't do is the minimum and maximum opening ranges, which you have to set manually. So 150 is the minimum, 450 is the maximum. So if you go and look at what ADR is on the DAX at the moment, which is 148, you would put in there 20% of that, 10% of that, sorry, which is 14. So it'd be 140. So that's in pips rather than in pipettes. And 20% of it would be 280. But play around with this in the strategy tester before you use it. But that's how you set it up to do the same thing. That set file is in there, so go and play with it. But that's how you set the ORB EA up to do the hedging. And then obviously, if that range is right, you're fine. If that range is wrong, you're going to have to manually do it. So it's similar, not the same. Right, we're going nowhere. So nothing to talk about there really with the indices this afternoon. And as I said, with the FX markets at the moment, we've got a few more ADRs come in. There's still no RSIs. So the ADRs we've had come in, Aussie, New Zealand, we looked at. Euro pound has now hit ADR. So we've got an ADR hit to the downside on the euro pound. Be careful with this one. We've got the euro rates tomorrow. So big news tomorrow. Aussie dollar overnight for the unemployment rate. We've got the euro rate at 115 and then 145. Lagarde is going to tell us what the future movement on the euro is going to be. And then in between that rate and Lagarde, we've got retail sales and PPI and unemployment for the US dollar. So tomorrow afternoon between 1:15 and 2 o'clock, all hell is going to break loose. So I'd be very surprised if we get a lot of movement before that. We'll see. So anything you take euro based today, you just literally, as I've been talking, in the last 5 minutes, we've had the reversal alert there. You can see the reversal alert's just kicked in at ADR. So good looking move up. Half an ADR is 17, which would be your target. So look for roughly half an ADR. So coming back up into those highs should be easily achievable. But bear in mind, if you get into this today and you don't get out of it today, tomorrow, the euro is either going to go up ADR or down ADR. So just bear that in mind when you're looking to get into these. Pound Swiss, that's just achieved ADR. We haven't had the reversal alert on it yet. We're just about to get it. You can see the support rectangle is holding. So buyers are holding control at the moment. As soon as that breaks, there's your entry short on the Pound Swiss. And the New Zealand dollar yen, first yen pair of the day. That's just come off of ADR. No reversal alert on that one yet. So there's your ADR hit, rejection. So that's potentially the start of your M pattern reversal. Drop down from there. So a few ADRs. That's also a double top look on the weekly high. Good confluence. ADR, double top in a range. Doesn't get easier than that, does it? Is the new EA for MT4 and MT5? I haven't. It's for MT4 at the moment. I haven't built it for MT5. So I will do it for MT5, but it's another bit of software. I've got to write it again. Not write it again, but I've got to recode it for MT5, so it won't come out at the same time. MT5 will be later. Stop using MT5. It's buggy. It's slow. Crap. Evening outro. Back from your holidays. Good man. Hope you got a better tan than I did. I had 3 days of rain in Croatia. To find out I have no trading account. You with my Forex funds, I take it then. Hope you've been doing good. Yeah. So, yeah, if you haven't heard, well, you have heard, obviously, I guess now, but unless it's your broker trading account, in which case then dodgy. But yeah, my Forex funds were naughty. We don't quite know how naughty. Oh, I got an email from DOW today. For those of you that were in the live room this morning, we were talking about DOW and DOW, people were talking about it as if it's a prop firm. It is not a prop firm. It is a completely different thing. I got an email from the owners of DOW today. Just looking for their blog. There we go. So I'm just going to post. I'm not going to. Never noticed that before. I'm not going to read the whole thing to you. I'll just post it in there. You can go read it later. But this explains the difference between them and a prop firm. They are not a prop firm. They are a broker, and they are regulated by the Financial Conduct Authority in the UK and the CN something, the Europe somewhere. CNMV in Europe. So these are the regulators. They are a regulated broker. But what a Darwin is basically a trading account that you have, which they can use to analyze what you do as a trader. If you have enough history in there, 6 months minimum is what you need really to get any investment, and it's consistent and it's within their risk parameters, they will invest in you and advise others to invest in you. So you attract funding from third parties. So think of it like a crowdfunding prop firm. That's the best way I can explain it. But there's no tests to take. You trade your account and it will analyze it for risk parameters. If it falls within the parameters, you're fine. If it doesn't, you'll never get an investment. So, as I said this morning, I've had Darwins for years and I've never had any investment. And I've got accounts which are showing profitability for years, but they're not interested in them because the risk profile is not right. So don't go flying off to Darwin. What I was just saying about was interesting. All UK regulated brokers or European regulated brokers have to publish at the top of their website how many people lose money with them. Look at this. 60% lose money with Darwin. That is the lowest figure I have ever seen on a retail broker. Most of the other retail brokers, if you go and look at anybody else like Axie, for example, will be 70 plus, 80 plus. 82.7% of retail investor accounts lose money with Axie. IG, 70% lose money with IG. Now it's going to test me. I need another UK regulated broker. What else have I got? Can't remember. Anyway, you get my point. Yeah. Darwin X. Do not play silly games. TD365. That's a good one. They're not UK regulated. Oh, yes, down the bottom. They've put it down the bottom. 67% lose money with TD365. Yeah. Really good broker, TD365. They've just introduced MT4 to support as well, but no fixed spreads. So ignore this. Looks really attractive. That's only for non-MT4 accounts. So if you trade on their web portal, you can have fixed spreads, which is great. Bloody good spreads they are, especially for scalping. But they can't use MT4, so you can't use EAs. So forget it for ORB. Automated ORB. Manual ORB? Brilliant. Automated? No. But these brokers do not muck you about, right? And this is why I use Darwin X. And TD365 are great. I don't use them personally, but I know they're very good. You can see by the amount of losing people, there's a hell of a lot more people making money because professional traders who know it's important to have a good broker use Darwin X. Axie, 82% lose money. What do Axie provide? Copy trading platforms. Yeah. It's all the gimmicks, all the copy trading and all the stuff where you don't know what the hell you're doing, stick some money in there, copy that guy and hope it works. Gone. Robo Markets, who is the UK arm of Robo Forex. Website seems to be incredibly slow today. IG70. Wow, that's really slow, isn't it? FX Pro, are they UK? Never used FX Pro either. FX Pro, 74.94%, 75%. Robo Markets, 72.87%. Yeah. So serious traders with serious money trade at Darwin X. Why? Because they're trading their Darwins. Yeah. These Darwins are proven accounts over time. Trying to find the Darwins now. Where are we? There. Oh. No, just want to go to Darwins. Show me the Darwins. Anyway. But yeah, so Darwin AI. No, Darwin IA, not Darwin AI. I was going to say. There you go. So these are the Darwins they've got running, where people are investing in them, but they're investing in them because they've got massively highly rated strategies that are tight as and returning more than the banks. Yeah, that's why they have got 60% of their people losing money and not 80% like everybody else, because the people that are putting the money into Darwin X as a broker are using it to copy people that are running successful investment firms. It's more investment than trading, scalping type stuff. Nice rejection on the New Zealand dollar yen. There's your M pattern forming at ADR. So if you want a super tight entry, there's your stop. You got a load of downside on that. Be safer to wait for the reversal alert, but CMC, Admiral, yeah, there's loads of them. But it's interesting seeing what the differences are if they're, with each of them, how much money people lose. My Forex fund's outro, yeah. So as Brian's just said, the other option is to go futures. You're going to be safe with any of the futures prop firms because they are all CFTC regulated. You can't not, I don't think. But then again, I don't actually know. So, yeah, you can't obviously trade on MT4 in futures. Pepperstone, another broker. Never actually had much luck with Pepperstone. I got terrible spreads with them. What do I trade on Darwin X? I trade the S&P 500. So I have a strategy which is on the uses the market reversal alert CA. Come on. So wow, it's a big manual. I see, that's why. So I've got an S&P strategy, which is here. So the 15-minute S&P strategy, which is basically designed to take advantage of bull markets in the indices. So I trade this within Darwin X. So it's kind of like my pension fund, if you like. So literally just buying the dips with the market reversal alerts EA. So the full strategy is explained in here, and the set files that I use. There's multiple set files. I actually use. Well, actually, I'm not using. I'm not trading it at the moment. I haven't turned it on yet. I'm on the verge, and I'm still on the verge. I'm still unsure as whether to turn it on or not, because I'm not sure we're back in a bull market yet. But that was the set file I was using before COVID, and after COVID. That set file is kind of a more conservative set file, but basically it's not designed to make an absolute fortune. It's designed to give you a much better return than the S&P. Yeah. So you can't see it very easily in here, but it's around about a 60% return per annum. But that obviously, caveat, that will vary a lot. It's very simple. It just uses the market reversal alert CA, and it uses the higher time frame RSI to buy the dips. That's all you do. That's all Warren Buffett does, is he buys the dips in the S&P. Very simple. The S&P is manufactured to increase year on year because it measures stocks. Stocks are manufactured to go up to keep shareholders happy. If shareholders are unhappy, people lose their jobs on the board. Therefore, the board members make sure stock prices continuously increase. This measures the top 500 stocks in the US who's manufactured to go higher. The thing just keeps going. That's the strategy. Very, very, very simple. Not mine. Warren Buffett's been doing it for years. Larry Williams did it for years. Loads of traders do it. It's a very well-known strategy. It works very well. I'm just trading something else over there as well. Everything is acting buggy and slow on my end too, MT4 and Ninja. That's probably your PC, Brian. Not fancy making a futures ORB? No, because what would you make it for? You could make it for Ninja Trader, I guess. But then, you know, it depends what, there's lots and lots of with futures, there's so many bits of software you can use. With, I trade ORB with my futures account, but you cannot trade a hedged version, obviously, because with futures, it's FIFO. You cannot go long and short at the same time. So you can't hedge in futures. So you can trade ORB in futures, but you can't hedge. Because it's first in, first out. So if you hit the short button and you're long, it will close your position, not send you short. US dollar CAD is coming down. Hopefully, I'm sure. So I've still got shorts on this US dollar CAD. I'm down here. So there's my average there, which is 175 ADR. I've banked 0.35 on that. I banked 0.5% on that, and I banked about 0.3% on that. I've also taken some drawdown control on this. This US dollar has been bane of my life this past couple of months, which is why I'm having a slow month, and last month was only 7% because US dollar and August has just been sideways, isn't it? Terrible. But hopefully it will start to liven up now. Certainly looking like it's starting. So I'm actually looking, I don't want this to go down anymore. Yeah, this was my initial target. So what I would like is a bounce into propulsion so that I can actually add that position back on again. I want to add that back on. So I'd much rather we actually put in a market structure that looks long so that everybody starts jumping on board long to drive it up to there, and then the market will short it back down from there. Ideally, that's what I want. As we know, we don't get what we want most of the time. I'm thinking about doing a challenge with the fivers. The trouble with the fivers is you only get 10%, you get 1 to 10 leverage. So you'll find it hard. So where's leverage gone? Yeah, so the instant, it's 1 to 30. High stakes is what you'd have to do. And you do get 1 to 100. That's the 2-phase one. You know, you do get, sorry, it's not them I was thinking of. It's this bottom one, which is 10 to 1. Surge trader. You only get 10 to 1 leverage with them. No use. Can't even scalp indices with that. Yeah, if you wanted to run the opening range breakout strategy on all 3 US indices in the afternoon, you can't do it. 10 to 1 doesn't give you enough leverage. And also, they don't allow EAs. Oh, yeah, no, they do. Yeah, sorry, they do. Oh, Surge Trader. I think it was Surge Trader that was the one I emailed that said you need to email them to ask about EAs. I emailed them twice and never heard back. I even contacted live support, who's told me to email the risk team, and they never got back to me. So they're not interested, are they? Trade-of-8. Yeah, you can trade futures on Trade-of-8, but you still can't hedge. So yeah, I could build it. I don't code for Trade-of-8 though. I've not built anything. My average is at 125 ADR on the US dollar CAD. Yeah, it's roughly where mine is. Somewhere around there. No, I'm not. Sorry, I'm a bit further than that. But that's because I've taken this position off though. Yeah, so I closed out that trade. If that trade had still been left on, my break even, I think, was there because this was in profit, this propulsion gap. So, which is why I'd like it to go up and down, because then I can get another position on. But if it just goes down, that's fine. I'm just worried about bouncing out of these lows, these weekly lows here, 125 ADR. If we can double bottom on those, hopefully we can get that leg down started, that US dollar weakness. And oil obviously is rallying at the moment. So we should get that rally on the CAD. We've had the news. Yeah, so 330 oil inventories have come out. There we go. So that'll be oil inventories, that candle. So oil inventories rallying oil, as you would expect, because supply is restricted with production being restricted. Therefore, price has got nowhere to go but up, which will help the Canadian dollar. Ryan, I run 2 static accounts, one for longs, the other for shorts, with the pre-5 on Ninja. Yeah, you could do that. You wouldn't be able to do that with the same prop firm, though, because they would identify that you can't run opposing strategies on... you could run one with Top Step and one with another firm. And if I was you, I would alternate the direction on them, because if they see you just go long there and just go short there, they might flag it. Yeah, I mean, that is, I hadn't thought of that, actually. That is a way of hedging on the futures market. Try. Surge Trader sucks. Yeah, they do. Surge is 8 cap, yeah. They're the only 8 cap I've got on there because they've got fairly decent trading conditions. Well, they haven't actually now, have they? I ought to take them off. To be honest, I'm considering taking the entire prop firm page down at the moment. Just not worth getting into prop at the minute. Use your own capital. You're better off. I don't know what's going to happen with these guys. I'm just not willing to put any more money into it until I've got some confirmation that we are actually going to survive as an industry in prop. Because at the minute, if my Forex funds is the first to fall, they will all start to topple. We just don't know which ones it's going to be, do we? As much as they say, don't worry, we're fine. My Forex funds never said they weren't fine either. You know, we're getting an awful lot of promotions thrown at us at the moment. Everybody's giving 30% off, 40% off, 2-for-1 offers all over the place. Why do you think they're doing that? Get the money in quick, boys. Run away with it. Go and live in Barbados. I don't know. That might be what's happening. I've got no idea. So at the minute, I'm going to steer clear. Watch the 5%ers. The 100 to 1 is for FX. It's 1 to 25 for indices. I knew there was something about them on the high stakes. Yeah, that's right, JC. I knew there was something. There was something about the fivers that just didn't work for me, and I can't remember what it was. And it was that leverage, different leverage on different instruments. So if you're going to trade indices, be careful, because you won't get the same leverage on indices as you do on FX. That is true across many, many brokers as well. I don't get the same leverage on indices with Robo Forex Prime as I do with FX either. Because they are riskier instruments. They gap. They don't give you as much rope to hang yourself, which is quite right. They shouldn't do. J3GM0194. Now there's a name that's difficult to say. Being very honest, really enjoy your YouTube stream and your indicators. Cool. Yet the affiliate links for the props on your website made me feel uncomfortable. Why? You don't want me to make a little bit of side money? If I showed you my affiliate statements, you would not worry. I can say hand on heart, I have earned less than $500 this year in affiliate revenue. I think it's probably less than 300, thinking about it. I'm not in this for affiliate marketing. I can guarantee you that. Also, the fivers MT5 only. That's the other thing about them. Yeah, MT5 only, which doesn't attract me at all. So yeah, there was lots of things that didn't attract me about the fivers. E8 is still my standout at the moment. E8 is the one that I will be using when this blows over. If this blows over, if everything is okay, I will be using E8 moving forward for CFDs. But as I say, I don't know what's going to happen. We're 1.5 hours in. Just seeing a little bit of volatility coming on across the indices. Actually, let's do that. Oh, it's just the hourly candle close. So a bit of volatility coming in. It's hourly close. So you get this happening. So market tends to go a little bit crazy on the hour because everybody that's trading hourly strategies, obviously hourly candle closes, orders get placed. So you get a lot of volatility top of the hour and quite often bottom of the hour as well. It's just the market placing orders because most successful traders trade hourly charts and above. I'm now using my funded FX and they allow EA trading without emailing. I like them so far. My funded FX. Not looked at them, I don't think. Don't like the name. I don't think I've ever seen this one. Live simulated accounts. Our prop trading firm offers up to 600 funded sim. At least they're up front. Good. I wonder if this wording they're using is because of what's happening with my Forex funds. I wonder if that's part of the problem. Profit split 80%. 8%, 5%, unlimited, unlimited. Minimum trading days 1. Minimum day, so it's 14 days to first payout. 8% loss, 5% daily. Yeah, looks okay, doesn't it? Leverage 1 to 100. They need to have a chat with their web designer, though, don't they, really? That should be lined up with that. Sorry, ex-web designer. In fact, I'll fix that for them. Okay. Fixed. There you go. Fixed your website. What was I going to look for? I was just looking for signs of 8 cap. I presume they're not an 8 cap. What's the cost? Oh, broken their website again. You just fix their tables again. If they need a web designer, just let them. Just Brian, if you just give them my number. I can't see where's the cost. How much does it cost? Why is there no prices anywhere? Am I missing something? They work with Think Markets. Okay, that's good. So they've got a third-party broker. At least that's good. But I can't see their costs. So now I've just broken their table again. Look. Oh, no, I haven't. It's good fun, isn't it? I'm risking 1/4 of an account. Surely the leverage should be fine. If I'm risking 1/4 of a count, I don't know, Alfro. You'd need to... You're risking 1/4%, you're okay. Outro effects depends on your size of account. Yeah. If the prop firms knew what Lee says about them, they wouldn't want him to be an affiliate. That's true. That is true. I got contacted in Discord by the managing director of Alpha Capital because I've just taken an evaluation with them, and he's just suddenly friended me. I'm wondering if he's watched the stream. I don't know. My Funded FX has a sister company, My Funded Futures. Our Funded Futures, rather. Okay. I just can't see prices. I've never seen a prop firm that doesn't show you the price on here. Which is just weird. You've got to sign up to see how much you... Ah, here we go. No. Oh, $500. Okay, so they're equivalent to my Forex funds price-wise. That's fine. My Forex funds were $499. Profit boost. Rapid withdrawal. $700. Okay. Well, they've got lots of different prices. It looks a bit complex, but they look all right. As good as the rest, I reckon, at the moment. Do YouTube videos teaching us how to program and code? No. That's a minefield. That's going to take a while. Cost is on the table. I didn't see that. I completely missed that. I was obviously having a blind moment. Refundable fee is listed there. It's the cost. Okay, everybody can see it. I couldn't see it. All right. I admit I'm blind. I'm obviously having a blind moment. That's because I was trying to fix their stupid tables. Look. There. Okay. Refundable registration fee. Right. Got you. Okay. But seriously, this is why I couldn't see it. It doesn't line up. And even if you make their tables the right size, it still doesn't line up. So they need to go and talk to their web guy and say, oi, learn to code. That table will do. CSS, why is it not letting me do that? See, it still doesn't line up. Right? That is that. That is that. That is that. It's right aligned, look. You need to center your text in those tables, look. I'm just doing coding for them. Just bear with me. I can't put a TD in. Multi-cell, root, multi-cell, root, multi-cell, size medium. Bear with me while I just reprogram their website. I can't be bothered. Anyway, they need to center align the text or left align it. Look, everything else is left aligned. There's a cell. Yeah, everything's left aligned apart from the price. Come on, guys. At least program your website properly. I'm with the funded trader at the minute. Yeah, there's loads of them out there. So just be careful with them all, guys. Just, you know, I really think this My Forex Funds is the tip of the iceberg. I think we've got potential avalanche ahead because, you know, it's not just My Forex Funds that are operating that way. There will be others operating in the same way. So you just don't know. When the markets are flat, Lee goes on a tantrum fixing websites. Yeah. It annoys me. I do that a lot, actually. It's part of my, and this is why I'm so good, I think, at doing stuff like this and about building EAs and indicators, because I am an absolute perfectionist. If I come across a website and I look at something and they've center justified text and all of a sudden down the bottom it's left justified, I go in and I do it for them just so I can read the website as I think it should be. I've even been known in the past to email people and tout for business when I was a web designer, just pointing out how crap their website is and their current coder doesn't know what they're doing because this should have been done that way. I've had some interesting emails back as well. You've got to entertain yourself when the markets are dying, as they are at the moment. So I'll leave it there today because we're just not doing a lot. Indices are crap and FX is stuck until tomorrow. So the CPI hasn't kick-started the market today. So tomorrow, I reckon, is when we're going to get the movement. I was hoping it was going to be this afternoon, but these are not out far enough for the market to worry about it. So anything you've got Aussie exposure, be aware of unemployment claims and unemployment change and unemployment rates tomorrow. We are forecast to stay as we are at 3.7. So if we get unemployment rate going up, we should get a pop on the Aussie. If we have the unemployment rate coming down, we will likely get a drop because that means interest rate pressure will be applied in either direction. That's the main news tomorrow. So we'll have a look at that tomorrow morning when we trade the Frankfurt session. And then obviously for the New York session, we'll unpick what's gone on here. But tomorrow afternoon, 1:45, this is when it's going to kick off. This is when Lagarde is going to tell us what the future forward guidance is going to be for the ECB, for the euro rate. And I suspect she's going to come out and say that what they've done today is terminal. That is it. So potential for downside in the euro tomorrow. And obviously, retail and unemployment is going to have an effect on the US. So tomorrow afternoon, hold on to your hats, in theory. And if it doesn't move off of this slot tomorrow afternoon, we know the banks have gone to sleep officially, because we're out of August, we're into September. We should be seeing volatility coming through, and we're not getting it. So something's got to kickstart it. We're 2 weeks into September. Hopefully this is it. But at the minute, we're not going anywhere, are we? So we've got no Bailey speaking either this week. So don't know what's going to go on the pound. Just meh. It's all meh at the moment. When the market's flat, you have to sense that. Surge dumped 8 crap and went with Think Markets. Have they? Probably because 8 cap have got such a bad name. That would not surprise me if they have moved. I haven't actually traded with Think Markets myself, so I don't know if they're good or not. Well, the 8 cap logo has certainly gone, hasn't it? See all this stuff, yeah? Coming from a web background, I know this is all utter rubbish, yeah? If you know anything about websites or running businesses, you'll know that there's a thing you can buy for $99 called a press release. And basically what a press release does is it pumps an article that you write out into the press release channels that nobody in the press ever sees, but it auto posts it on these websites that in an area that no one ever goes to. So basically, if I write a press release now saying Lee's amazing, he's got the best EAs in the world, and he's really cool, you should go and check out his YouTube channel, I can pump it for $99 onto all these websites. And then I can put this on my website saying that I've been seen on Bazinga, Yahoo Finance, Market Watch, Associated Press. You'll never see that post anywhere, but I can send you a link to it if you want to. Doesn't that make me look posh? No one will ever read that information. It's all a big smoke and mirror. But yeah, anyway, I just know when I see these things, I just think, ugh. I'm just going to look at brokers. There we go. Think Markets. Yeah, so they have switched. Interesting. Yeah, so I would kind of give them a little leg up in that respect, because they've moved away from 8 crap. But still, just be careful with them all. You know, they're all a little dicey at the moment. Right, I'm going to leave it there today. So I'll be back tomorrow. We'll trade the DAX again, see how we get on tomorrow with the opening range breakouts. We'll watch, obviously, what's going on here. You can see what I'm in. I've been in this stuff for what seems like forever now, and there are no RSI extensions available to get me into any new positions. One thing I was going to do was run through all the EA set files again today, but I won't bother. I'll just whiz through them quickly. But ADR reversals done 15%, 2% drawdown. Somebody asked me about it in the Telegram group, and I completely forgot. I loaded it up even to remind me, and I minimized it. That's my account, as you can see. The hedging set file, 16%, 11% drawdown currently, and the H4M15 strategy is 2.3% with 0.4% drawdown. So all profitable across the board. But as I say, very few opportunities at the moment. So I will just took a short on the NASDAQ propulsion. Yeah, now that does look like a good short where we are at the moment. If we can break back down below that high. So that propulsion gap's just filled at ADR. If we can break that high, we should be able to flush at least down into that propulsion gap. So if we are putting in low, high, that propulsion gap is your next test. Failing that, we're going to push up to about 125 ADR and pull back from there. But yeah, it looks good as a short. I was just looking at that. Funny you should say that. I was just looking at it over there, thinking that looks like a good short. Great minds, Brian. Great minds. Anyway. Sorry. Pending order under that one. Yeah, I'll be back tomorrow. We'll trade the NASDAQ as usual, the DAX rather, tomorrow morning. Back tomorrow afternoon, same time for the US indices. Anything you need, I'll be in Telegram as usual, answering questions and stuff. So, Harold, you fixed my website and removed the funded page. No, you haven't. I'm going to watch now as my funded page disappears, and I know I've got a hacker. So yeah, I'll be back tomorrow, same time as usual, doing the same stuff. And hopefully we get some movement tomorrow afternoon. So we will see what happens. All right. Have a good one. Anything you need, let me know in Telegram. Otherwise, I will see you guys tomorrow morning, 7:50 and 2:20 in the afternoon. Have a good day.